All right, welcome to The Explainer. Today, we're jumping right into the massive forces that are really shaking up the 2025 investment world. We're going to talk about a market that feels like it's on a knife's edge, all thanks to a handful of tech giants and one technology that's changing, well, everything. So let's get right to it. After two absolutely incredible years, we're talking gains over 25%, US investors are kind of standing at a crossroads. The big question on everyone's mind is pretty simple. Can the good times keep rolling, or is a whole lot of volatility waiting just around the corner? The answer, might actually be hidden in who's been driving all these gains. And here's the thing, all that uncertainty, it's really coming from just how top-heavy the market has become. You see the big headlines about the S&P 500 hitting new highs, but that's not the whole story. Those gains have been packed into just a tiny number of massive companies. For pretty much every other stock, it's a completely different picture. It's really become a tale of two markets. Okay, and this chart right here, it just lays it all out perfectly. That first bar, that's your standard S&P 500, where the bigger the company, the more weight it has. So giants like Apple and Microsoft have a huge say. The second bar is an equal-weighted version, where every single company counts the same. I mean, look at that difference. The regular index has basically doubled the performance of the other one. It's a crystal clear picture of how a few big winners have been dragging the entire market average up. So let's really dig in here, right? To get what's going on, we have to talk about the small group of companies responsible for all this concentration, the famous Magnificent Seven. Honestly, they've become a market all by themselves. But here's where it gets really interesting. Even inside this super exclusive club, 2025 is showing a massive split. I mean, check this out. It's definitely not a case of a rising tide lifting all boats. You've got Alphabet just soaring, up over 65%, mostly because everyone's excited about their new AI chips. NVIDIA, of course, is still a beast at around 41%. But then you see much quieter gains from companies like Apple and Amazon. So what does this tell us? It tells us the market's getting smarter, It's rewarding actual specific progress in AI, not just slapping a tech label on something. And the one thing that connects all these giants, you guessed it, it's the AI gold rush. The buzz around artificial intelligence has created these unbelievable expectations for what they're going to earn in the future. And so investors have just been pouring money into the companies they think are going to lead this revolution, sending their values to the moon. And who's at the absolute center of this whole thing? Well, it's NVIDIA. They've basically become the company selling the picks and shovels in this AI gold rush. I mean, just look at this chart. It's staggering. For 2025, NVIDIA has grabbed 86% of the entire AI data center market. They're not just digging for gold, they're selling the gear to every single other person digging, which gives them this incredible, almost untouchable position. So it's no surprise the market is expecting huge things from these companies. This quote really says it all. For 2025, analysts think the Mag 7 will grow their earnings by 18%. And the other 493 companies in the S&P 500, they're only expected to grow by just under 11%. The big bet is that this dominance isn't just a fluke, it's going to continue. Okay, but it's not all smooth sailing. There are some serious storm clouds on the horizon. I mean, after a run like they've had, growth is bound to slow down. But maybe the biggest risk is the absolutely insane cost of this AI arms race. To stay on top, these companies are planning to spend, astronomical amounts of money. We're talking tens of billions of dollars every year just to build out their AI gear. That is a massive bet that has to pay off. And it's cash that's not going back to investors anytime soon. So with all this concentration in just a few AI stocks, you kind of have to take a step back and ask a really basic question, right? Is all this excitement just hype, or is it based on something real, something tangible? What actually creates wealth that lasts? Is it a good story or something deeper? When you really look at it, assets fall into a couple of different buckets. On one side, you've got stuff like crypto. Its value is basically what the next person thinks it's worth. Then you have stocks, which are a piece of a real business that actually makes stuff. But even stocks can get swept up in pure hype. And then, way on the other side, you have something like real estate. It's real, you can touch it, and it provides something fundamental that people actually need. And this is exactly why you hear some of the most successful investors in history being so blunt about these purely speculative things. The late, great Charlie Munger famously called Bitcoin rat poison squared. His partner, Warren Buffett, once said that if you offered him all the Bitcoin in the world for just 25 bucks, he wouldn't take it. Why? Because as he put it isn't going to do anything. Their whole point is, what does the asset do? Does it actually produce anything on its own? So this leads us to the next big topic. Because when you have this much hype around purely digital stuff, you get some pretty unique and, frankly, scary risks. Let's look at one specific threat that's on the horizon for crypto that could really shake it to its core. And that threat, it comes from something that used to feel like science fiction, but is getting very, very real: quantum computing. Basically, these are computers so powerful they can solve problems that are literally impossible for the computers we use today. The big fear is that a powerful enough quantum computer could just crack the codes that protect, well, everything digital, from your bank account all the way to assets like Bitcoin. So, how big of a deal are we talking about? Well, researchers think about 1.7 million Bitcoins, that's right, 1.7 times million, are sitting in these older, super vulnerable accounts. They call them zombie coins because they haven't moved in years. If a quantum attack ever becomes possible, these would probably be the first domino to fall. And if all of those suddenly flooded the market, it could cause a complete and total collapse of confidence in the entire thing. Now, the crazy thing is, nobody can agree on when this actually becomes a problem. And this slide shows that debate perfectly. You've got some folks saying we need to build defenses by 2026. Others think it could take 5 to 10 years just to upgrade something like Bitcoin. And then you have others who are like, we've got 30, maybe 50 years. Nobody knows for sure. And that uncertainty, that's a huge risk all by itself. So, okay, the market's super concentrated. There are these wild tech threats out there. What are you supposed to do? Well, financial experts usually point to a few key strategies. First, rebalance your portfolio. Make sure you're not too loaded up on just a few big winners. Second, if you're really worried about a big crash, you can look at so-called tail risk hedges that are designed to pay off if the market really tanks. And finally, hey, volatility isn't all bad. It can create chances to sell some losers and use those losses to offset your taxes on future gains. And all of this really boils down to one final, huge question, a question every single one of us has to think about. In a world that seems to be all about digital hype, massive speculation, and these complex threats we can barely see coming, where do you actually find real, sustainable, long-term value? Do you chase the hot thing, or do you focus on tangible assets that have actually stood the test of time? How you answer that is probably going to decide who the winners and losers are over the next decade.